All right, hello. Welcome to Geostrategy in Action, a series in which we explore how geopolitical developments are affecting companies around the world and how they're shifting their operations and strategies in order to adapt. So my name is Courtney Rickert McCaffrey. I'm the EY-Parthenon Global Geostrategy Insights Leader, and I'm pleased to be joined today by Greg Daco. Greg, welcome.
Thank you very much, Courtney. I'm Greg Daco, Chief Economist at EY-Parthenon. A pleasure to be on.
Great. Thanks again for being here. So, today we'll be covering the conflict in the Middle East. Now, of course, the conflict is first and foremost a humanitarian crisis, but given our audience is global business leaders, our conversation today will focus on the key implications for the global economy and for companies around the world. So, before we dig into some of those macroeconomic implications, I want to set the scene geopolitically. Now, obviously, events in the Middle East have been pretty dynamic in the past couple of years, and it's actually led to what we're calling a recalibration in the region. This is something that we highlighted in our 2026 Geostrategic Outlook, actually, where we argue that this recalibration is being shaped not only by military conflicts, but also by shifting diplomatic postures and an evolving economic landscape in the region. Now, even with that sort of ongoing development, what we're seeing in this particular conflict are several dynamics that make it different from the past. So, one is the targeting of Iranian leadership, particularly at the start of the conflict. Two is the effective closure of the Strait of Hormuz, which is the first time this has ever happened. And third is really just how the conflict has expanded geographically throughout many countries in the Middle East. Now, of course, the key question that we keep getting from clients is how and when this conflict will be resolved. Now, unfortunately, we don't have a specific answer to that, but there are a few things that we're watching to give us an indication of how and when it might end. So, one is progress toward any military or strategic objectives. Two is impacts on global or local economies, which we'll be exploring with Greg today. Third is domestic political dynamics in a lot of the key countries that are involved, particularly Iran, Israel, and the US. And then third is diplomacy by other countries, both within the region as well as around the world. So countries in the Gulf, European countries, India, China, others all have a stake in this, and we could see their diplomatic efforts pick up in more significant ways going forward. So it's clear that the situation continues to be fluid and uncertain, of course, the ceasefires are in place for now, but daily headlines continue to fluctuate and tensions do continue to remain high in the background. Now, while the geopolitics continue to be uncertain, the macroeconomic impacts are becoming clearer all the time. So, Greg, I'd love to pull you in here and get you to share how you're thinking about the dimensions of this conflict and how it's affecting the global economy.
Yeah, I think it's very important to think around a framework as you positioned it. We are in a situation that's extremely fluid when it comes to the Middle East conflict, and so having a framework allows you to better understand the potential risks, the potential opportunities from a business standpoint. The other thing that's important to highlight is that we are in this environment where supply shocks are continuously affecting global economic activity and influencing the way businesses conduct activity. We have these layered supply shocks that are affecting the way we conduct economic activity. Now, when it comes to the Middle East conflict specifically, there are really three dimensions that are key to observe. One is the duration of the Middle East conflict. Two, it's the severity of the Middle East conflict. So, is it a trade flow disruption or is it a disruption in terms of production, refining capacity, or liquefaction capacity, or any type of destruction in terms of the effect of the conflict? And then three, how close are you? What's the proximity relative to this conflict in terms of being a country in the region or being a country that's more or less exposed to these disruptions? And then you have to think about the channels of transmission of this shock. The first, of course, is the fact that we have seen significant movements in terms of commodities prices. The second, which tends to be immediate, but so far has not been catastrophic, is financial market development, so financial market stress. The third is that of trade disruptions that are physical disruptions in terms of trade flows. And then the fourth is the impact on certainty. Are businesses uh, aware of recent developments? Are they feeling an environment of uncertainty that is constraining their ability to conduct business? And if so, how is it constraining their ability to conduct business, to invest, to hire? Those are really the four channels of transmission. And when you have that framework, you're better able to develop scenarios to try to understand how the Middle East conflict may evolve and what might be the implications from a business standpoint.
Yeah, thanks, Greg. That's really helpful. As you say, I always love a framework to try to understand situations that are unfolding in real time, and it really helps to put a lot of the daily headlines and different developments into context. So, I guess maybe if we could apply that framework that you just laid out so nicely, how would you characterize the current macroeconomic environment around the world and the risk that this conflict poses to it? Sort of what's the current state of play?
Well, right now, when you look at the global economy, there is no evidence of an imminent recession. We have what I would describe as relative resilience in the face of all of the supply shocks that we've navigated over the past couple of years. But we are starting to see two phenomenons. One, an unstable equilibrium when it comes to investment decisions, hiring decisions, when it comes to decisions from a number of private sector actors and public sector actors as to the direction of travel of the economy. And two, growing polarization. This is one of the key themes of our macro outlook for 2026. We're seeing growing polarization between economies that usually grow at a similar pace. They're increasingly influenced in different ways by the framework I just described, but also polarization within economies. Not all actors are created equal in the face of an energy shock, in the face of a commodities price shock, in the face of a supply shock that is disrupting trade activity. And so it's both a story of resilience that is gradually being eroded by these layered supply shocks, but also growing polarization as to who can actually benefit from potential opportunities in this environment and those that are most likely to be negatively hit by the Middle East conflict. So it's a polarization and resilience story at the global economy level.
Yeah, thanks, Greg. And it actually highlights a key point, which is that we are, of course, today's talking at the global level, but we will have future episodes of this series that dive into how this is playing out in different regions around the world, because there are some key distinctions, as you rightly point out. So, if we look ahead a bit more, obviously there are a lot of risks to the downside. There's a lot of this uncertainty for both government leaders as well as business leaders. And we really can't say with any certainty how and when this conflict will end. So that's when we like to rely on scenario analysis, right? Both within our geopolitical team and our macroeconomic team, because that's just really the only way to deal with this uncertainty is explore multiple potential futures for how this could unfold. So I want to give you a little preview of some of the scenarios that we're thinking through right now, and it really boils down to one key question, which is how willing will both sides be to make concessions in pursuit of a durable agreement to end the conflict. So going beyond sort of the ceasefire status to really sort of solve some of the underlying tensions, the underlying issues that led to this conflict in the first place. So depending on how that question is answered, we really see four different scenarios at the sort of geopolitical level. So one is the conflict persists, where neither side is willing to meaningfully negotiate, and there's even the potential for the conflict to expand further. In this scenario, the Strait of Hormuz, of course, remains closed, as we've seen in the initial phase of the conflict. A second scenario is more asymmetric disruption, where U.S. and Israeli military objectives are deemed to be met, and the U.S. sort of continues to seek negotiations, but Iran and its proxies sort of continue sporadic attacks or asymmetric activities, and that means that there will be a lower volume of ships transiting the strait than normally. Third is what we're calling cooling without conclusion, where we see Iran sort of engaging in talks with some global and regional powers. The U.S. may sort of disengage more fully from this, and that results in a tentative stabilization of the situation and sort of a resumption of a lot of normal business activities. But, the underlying tensions that led to the conflict are still there. And so there's no real conclusion. And then finally, we could see a durable resolution. So this is where, both sides, meaningfully negotiate, make concessions, and find a resolution that really addresses the conflict and its underlying issues, resulting in a more stable operating environment throughout the Middle East, with, again, a fully open Strait of Hormuz. So those are, at a high level, sort of the four ways that we see this potentially playing out in the medium term, so in about the 1 to 2 year time horizon. So Greg, I'm curious for your reflections on that. How would the macroeconomic environment look in each of those scenarios, or what are the key differences across them?
Yeah, thanks, Courtney. And I think you make sure to really highlight that this is a fluid situation. So it's not as if we are in one scenario and then we're essentially going to be in another scenario, and that's going to be the end state. I think there's a lot of fluidity between these scenarios, and this is something we discuss with a lot of our clients in terms of not essentially anchoring to one specific scenario, but really keeping one's options open in terms of potential scenarios unfolding. When it comes to modeling essentially these different scenarios, we work along an axis of severity. And to give a benchmark that everybody can look at, we look at oil prices. So the price of Brent. The price of Brent before the conflict was trading around $65 per barrel. Right now, we've seen prices hover around $100 per barrel. In our baseline scenario, we essentially have prices that average about $95 per barrel through the second quarter of 2026, and then ease back towards $80 per barrel by the end of the year. This would be more on the positive side, on the encouraging side, where there tends to be a de-escalation of the current situation. But we have an adverse scenario, which is very much tied to what you just described, where you continue to see asymmetric developments on both sides. And then we have a more severe scenario, which is essentially your ongoing or potentially escalating conflict. In that more severe scenario, which is your escalation scenario, we could see an environment where oil prices rise towards $150 or $160 per barrel and stay at that higher level for a prolonged period of time. That would lead to much more significant disruptions in terms of economic activity. And to give you one number, in terms of our baseline assumption, we have global GDP at 2.8%. Should we end up in a more severe scenario, we could see global growth and below 2% for 2026, with, of course, significant differences between economies that are more exposed to this conflict and economies that are potentially more insulated for natural reasons, or potentially because they're benefiting from other supply shocks like the AI tech revolution that we're currently living through. So a myriad of potential scenarios, but the more severe scenario is one in which you could see recessions develop around the world. And unfortunately, with every day that the conflict goes on and the strait remains closed, we are inching towards a more severe scenario with prolonged disruptions on the supply side, difficulties for central banks to deal with high inflation and low growth, and an environment of more persistent financial market and commodities markets disruptions.
Yeah, thanks, Greg. That's really helpful, and certainly lots to be planning for and looking out for. I think the main message is really that organizations around the world need to understand how they're exposed to this conflict, try to mitigate the impacts in the short term, while also trying to adapt for future resilience to this or any other potential disruptions that could arise. So this will continue to be an uncertain and volatile situation for the foreseeable future. Hopefully, these scenarios and our conversation today helps you think about how this could be woven into your strategic planning, asset valuations, supply chain resilience, and broader risk and resilience efforts as well across the organization. So, thank you, Greg, for joining me again today.
Thank you, Courtney.
And thank you all for tuning in to this episode of Geostrategy in Action. Join us on future episodes when we dig deeper into how this conflict is affecting countries and companies around the world. Thank you.